Hello and welcome to Crypto Bible. My name is Oliver, and in today's episode we're going to be covering some news stories in the world of crypto. Now, if you're new here, go ahead, press the subscribe button and turn on your notifications so you never miss any breaking news stories in the world of crypto, and also some other cool content we do in the world of cryptocurrency. And if you want, throw me an early like, why not? Right, let's get stuck straight in and have a look and see what the market is doing today. The top three trending coins: Bitcoin, Shiba Inu, and Shiba Doge. Biggest gainers: Digital Finance Exchange, Crypto Sword, and Kuei token. And then we go down to the market. Bitcoin's trading at $36,830.73, down 3.86%. Ethereum's down 5.6%, trading at $2,484.28. BNB $374.53, down 5.14%. So let's jump into the first article of today. This is from Decrypt, and researchers suggest quantum computers only a decade away from cracking Bitcoin. Nevin's law, not Moore's, gives quantum computers about 10 more years before they could ever crack the leading crypto. Now, quantum computers use quantum mechanics and are, I believe, more energy efficient than other computers. So what does it say here? A quantum computing graduate student has calculated how large a quantum computer would need in order to crack Bitcoin's secure cryptographic algorithm. Mark Webber and his colleagues from the Ion Quantum Technology Group at the University of Sussex concluded that quantum computers need to be 1,000,000 times larger than they currently are before ever cracking Bitcoin's SHA-256 algorithm. An algorithm first published by the US National Security Agency in the early 2000s, now that also known as the NSA. The Ion Quantum Technology Group conducts research around quantum computing and microwave quantum sensors. Conventional wisdom maintains that Bitcoin's encryption technology is so strong that attackers need to commandeer 51% of the combined computing power of the global Bitcoin network to compromise its immutable ledger. But every transaction on Bitcoin's ledger is assigned a cryptographic key, a random string of letters and numbers, which is vulnerable for a finite length of time. Given enough computing power, or a power enough quantum computer, this key can be cracked. Weber estimates that if an attacker has a 10-minute window to crack the key, they would need a quantum computer with 1.9 billion qubits. That sounds like a lot. If the key is vulnerable for 24 hours, this figure drops to 13 million qubits. Any quantum computer wizards out there, let us know what that means. A million qubits. It doesn't explain it in this article, so it sounds like it's a lot. Could quantum computers ever crack Bitcoin? Given that the largest superconducting quantum computer on the market is an IBM's 127 qubit model, it doesn't look like quantum computers pose much of a security threat to crypto. In traditional computing, Moore's law dictates that the number of transistors in a microchip doubles every 2 years, while the cost of the computers is halved. So in essence, as time rolls on, we get more bang for less buck. Well, that sounds good to me. In the world of quantum computing, this law has been replaced by Nevin's law, which dictates that quantum computing power undergoes doubly exponential growth relative to conventional computing. To put that into perspective, doubly exponential growth would have given us laptops and smartphones back in 1975. Can you imagine people in the 70s with laptops and smartphones? It wouldn't work. So if quantum computing hardware improves exponentially faster than regular transistor circuits, then theoretically it could one day eventually crack Bitcoin's code. It's just a question of when. Weber believes it might be possible in a decade. Interesting. Let me know your thoughts about that article below. Let's jump into the next one. It's Decrypt again here. Crypto tax software firm Cointracker raises $100 million to help traders prepare for the IRS. So with a fresh 1.3 billion valuation, Cointracker has achieved unicorn status right before tax time. Handy. So in brief, Cointracker is a crypto tax software. Company is $1.3 billion valuation. It's using $100 million in funding to scale up the product and company. With the IRS filing period just around the corner, one crypto tax company is ready to put its name on a lot of returns. Cointracker, a startup that makes crypto investment tracking software, announced today that it's raised $100 million in a Series A round led by Palo Alto-based venture firm Accel. Other investors in the round include Coinbase Ventures, Kraken Ventures, Intuit Ventures, as in TurboTax, and Y Combinator Continuity, the famed Silicon Valley incubator's venture arm. Cointracker is a software designed to make it easier for crypto users to track their tax liabilities and report earnings and losses to the IRS. The frequency with crypto transactions take place, combined with the still evolving reporting guidelines of the Internal Revenue Service, makes filing taxes difficult for crypto users. As CoinCenter's Peter Van Valkenburg testified before Congress in November 2021, existing IRS policy leaves taxpayers uncertain of their obligations with regard to cryptocurrency transactions. Cointracker's valuation proposition is in removing that uncertainty. In addition to keeping score of gains and losses, the tracking software purports to optimize tax strategies to save users money, and it integrates directly with not only major exchanges, but also turbo taxes. Cointracker and Unicorn. The funding round means that the company's valuation soars to $1.3 billion. It's a big jump from their previous fundraise of $2 million in 2018. And in the dark crypto winter, Cointracker co-founder and CEO John Lerner told Decrypt over an email that the company intentionally chose not to pursue funding in the intervening years, as it was a turning point. But it saw an opportunity to expand as a cryptocurrency investing is on the rise and US lawmakers fiddle with IRS reporting requirements. Hundreds of millions of crypto users globally need to become tax compliant before there are negative implications like tax audits and penalties, he said. So it also plans to keep pace with a growing range of assets, NFTs, that must be reported to the IRS, as well as exchanges and platforms that traffic in them. It already boasts direct connections with about 50 such platforms, from Coinbase to Cash App, while users can import CSV data to track transactions from another several hundred additional platforms, among them Uniswap and Lolly. They're a company that are making it easy for firms and people to, do their taxes so they don't get penalized. Would you use them to help you with your taxes? Would you need a crypto tax software, or are you pretty organized and you can document it all yourself? What do you think about that story below? If you have any thoughts, let me know in the comments section below. On to the next article. Okay, final story of the day. DM, Facebook's token, reportedly trying to sell assets. Is this the end of Facebook's stablecoin ambitions? So Facebook's DM has been flailing for 2 years, according to Bloomberg. The association behind the stablecoin may be throwing in the towel. Oh dear, it doesn't look good for, Meta, it should really say. But actually, no, it's probably linked with Facebook, isn't it? So we've got a picture here, Facebook, DM. In brief, the DM Association is exploring ways to sell its assets, per a Bloomberg report. DM Association, formerly known as Libra Association, the stablecoin project started by Meta, formerly known as Facebook, may soon be known as abandoned. The association was led by Facebook and a smattering of financial firms, venture capitalists, and aid organizations, is contemplating selling off its intellectual property and other assets as a way to return capital to its investors' members, according to Bloomberg. Any sale which has not been confirmed by DM or Facebook would likely spell the end of Facebook's cryptocurrency ambitions, at least in the short term. That's quite a big thing, isn't it? Because we know Facebook, Meta platforms, they're investing heavily into the metaverse. And we know in the metaverse, you're going to need cryptocurrencies to buy and exchange, NFTs. It will be the currency. So the fact that their DM stablecoin ambitions seem to have fallen a little bit flat, I don't know. Are they going to come up with another token and another way of pushing it on? We'll have to wait and see. What do you think? Let me know in the comments below. Announced in 2019 to both fanfare and confusion, Libra was meant to be a stablecoin tied to a basket of global currencies. The coin's construction meant that rather than mirroring the value of the US dollar, as Tether and USDC does, Libra could almost become its own global currency managed by the Libra Association. Obviously, US regulators weren't thrilled. Within months, pressure from regulators and lawmakers caused Libra Association members to bail on the project. In a single day in October of that year, eBay, Stripe, MasterCard, and Visa all resigned as founding members. Ouch. Big companies just going, yeah, I'm out. Yeah. Me too. Visa, what about you? Visa, are you still in? Nah, afraid not. We're out as well. That's a shame. Following PayPal's lead the week before. Facebook stuck with it. It rebranded to Diem, scaled the ambitions down from a dollar rival to dollar-based stablecoin, and went so far as to release the Novi Crypt wallet, but as a wallet to hold Paxo dollar rather than the Diem stablecoin. Though Diem has initially secured crypto bank Silvergate to issue the coin, the Federal Reserve threw cold water on the plan hardly surprising that given the US regulators such as the Securities and Exchange Commission and the Office of the Comptroller of the Currency has stepped up their efforts to regulate stablecoins in the last year. Throughout, Diem hemorrhaged executives and engineers, culminating in the departure of founder David Marcus. We heard that a while back at the end of 2021. In a possible sign of things to come, Diem member Andreessen Horowitz hired two of the lead Novi wallet engineers away from the project in November. According to Bloomberg, which cited anonymous resources, discussions are early. There's no guarantee Diem will find a buyer. After all, this is one stable coin that's been anything but stable. So there you have it. Pretty interesting. And we know Meta, Facebook are investing heavily into the metaverse. They're going to need some sort of cryptocurrency, I'm guessing, to use for their users to use it. But that article kind of shows us that Diem is flailing. Investors have pulled out. Are they going to create perhaps a new type of coin, a new name, and try and rebrand it? Very interesting. Let me know your thoughts below. Any other thoughts on today's news articles? Let me know in the comments below, guys. As always, throw me a like and get yourself subscribed to Crypto Bible and press that notification bell icon on so you're always up to date with groundbreaking stories and news in the world of crypto. And we have loads of other cool content as well. Once again, thank you ever so much for joining me for today's episode, and I'll see you on the next one.